Hello, I'm Mark Glowry from Independent Analysts Investors Intelligence. I'm here to talk about technical analysis. Now, the majority of the analysis that one reads on stocks is fundamental, focusing on the company's profitability and the prospects for future growth. But profitability, or the lack thereof, will not move a stock price. The collective actions of traders and investors, interacting in the market and building the supply and demand picture, is the sole driver of price. This study of the interaction of buyers and sellers is known as technical analysis, sometimes known as charting. At Investors Intelligence, we scan thousands of charts every day, looking to identify profitable trading opportunities from emerging trends and patterns. Now, the role of the technical analyst is to identify the primary trend. We also look to identify relative trend, where a stock may be outperforming or underperforming its peers or the index. Looking at these, we spot support and resistance levels, and we put this all together to identify signals and patterns. Let's take a look at the chart of British Aerospace. The stock established support during the March-April period, around 3.20. This is an area where buyers moved in and accumulated stock. Later, we see the stock begin to trade higher, moving into the 370 area, touching 380, but we draw in the support level at 320. Mindful that the market will react to this level if it is revisited. On the 11th of June, the stock traded back down to the 320 level. We were watching closely to see if there was any reaction to this prior support level. Indeed there was. After a quick test on the 15th of June, a strong rally followed through. This support level is useful not just as a potential entry point, but it also allows us to place a stop at a technically important level. We know that if the price drops below that prior support level, the trade is invalid, and by this method we are able to establish some method of downside control on the trade. There's three basic types of technical trade that we look to identify. The first is trend running, the next are breakouts, and the third are reversals. I've prepared a few examples of these types of trades. The first example is British Telecom. After peaking around the 300 pence level in 2007-2008, the next year or so saw an extremely consistent downtrend with a smooth sequence of lower lows and lower highs. This is a good example of a trend running opportunity. In the spring of 2009, we saw this consistent downtrend start to break up. In March and April, higher lows were posted on the chart, indicating a change of trend was afoot. At that point, we would not be looking to trade the stock from the short side any longer. The next type of trade is a breakout. This is where we look for a stock moving through a support or a resistance level, indicating the next leg of a trend is likely to be afoot. We've chosen Balfour Beatty here, which traded a well-defined range during the spring of 2009, breaking through the 320 support around the June area. At this point, the stock is viable for a short side trade. Again, the stop level can easily be placed at the prior support. We spoke earlier about relative trend. This is an important concept. When we look at a stock, we don't just look at the stock's price action, we look at its performance relative to its peers or relative to its index. This is an important method of identifying internal rotations within the market and attempting to identify where the money is moving. Our example here is William Morrison. William Morrison was trading, broadly speaking, sideways throughout the first half of 2009. It did have a negative bias. But if we look at the lower window of this chart, we notice that since May, it's ceased to make lower lows on a relative ratio basis, meaning that it's moving to outperformance. This suggests money is rotating into the stock. Indeed, that's what happened. Over the next few weeks, we saw a remarkable rally in the stock. Finally, I'll leave you with a point and figure chart of the FTSE 100. It's a pivotal point for the index. After a steep downtrend, we're seeing price action base out. At the moment, It's trying to push above the resistance levels that have been established over the spring and the summer. Should this happen, further gains look to be on the cards, but it's too early to tell. We'll be monitoring this price action over the next few weeks and months to identify the next step.